Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your host Nickey Mirchandani. Well, in top headlines today we have markets which are looking to set for a positive start, tracking global cues. US markets ended higher on a stronger than expected retail sales data. SGX Nifty indicate a positive start coming in for Indian equities. Asian shares follow Wall Street higher in a risk-on rally. FIIs continue to be net buyers in equities for fourth consecutive session. They've bought equities to an extent of around 432 crore in equities. DIIs have been net buyers to an extent of 516 odd crore in equities. Back home, January trade deficit data is at 1 year low. Well, with that, let us get going and discuss some stocks and strategies today with Sudeep Shah, Deputy Vice President, Head Technical and Derivative Research Desk with SBI Securities. Sudeep, good morning. Nifty has scaled past that 18,000 level clearly, in yesterday's trade. Do you think we'd be able to scale past that level today? Be around that level or above that level for that matter?
Absolutely. Good morning, Nikki, and good morning to all the viewers. Now, let's understand what has happened in the past few days, like post the budget markets Nifty has been consolidating since the past 10 sessions, and it was not able to breach the budget day high of 17,972. But yesterday, during the last hour rally, it has managed to do that, and it has even managed to cross the resistance zone that was formed by a falling trend line, which was formed by joining the lower swing highs of 18,887, which was made in December 2022, and 18,201, which was the January high. So I feel that having taken out that resistance and breaking out after a consolidation, I feel Nifty is headed for at least a move to 18,300, 18,350, and 17,930, 17,950 would act as a strong support going forward from here on.
All right, Sudeep, talk about Bank Nifty levels. It's been underperforming Nifty for quite a while. What do you think? We'd be able to see more support coming in from that one?
Absolutely. See, if we see the Bank Nifty, if we see first Nifty is just 4% away from its 200 DMO, but Bank Nifty is 7% away. So that in sense shows more strength within the banking sector. It was just that the Bank Nifty was in a tight range of 500, 600 points in the last 8-10 sessions now. So post that breakout yesterday above 41,600, 41,700, I feel that now a lot of stocks within the banking names, Kotak, ICICI Bank, HDFC Bank, they're all ready to make a move on the upside, and that would take Bank Nifty higher. Also, that is the reason we feel 41,000, 41,200 will now hold on as an important support until this holds. Index can make a move up to 42,300, 42,600 on the upside.
Sure. Sudeep, before we chat about RIL, because a lot of support has come in yesterday's session from RIL, and in fact for the last 2 consecutive sessions, give us 5 stocks trading near the breakout level.
So, see, the first one, as you discussed about RIL, let us take that first. Now, Reliance Industries had taken support at 2300, 2310 zone, which was very close to its October low. So now that essentially forms a kind of a double bottom area. Now, prior to yesterday's breakout, the stock was trading in this 2300, 2390 zone for a good period of 13 sessions. One thing notably what is important is that while in the same period from January 23rd, oil and gas sector has corrected by 17 to 18 percent. Reliance has only corrected by 7%, and on the way up, the index has recovered only 1.5% in the last 2 days, while Reliance has rebounded 5.5 to 6%. So that shows that there is a clear outperformance shown by Reliance, and we feel that with the derivative data, what we are seeing, there has been massive unwinding into 2340, 2360, and 2400 calls, while there have been a lot of put additions in 2400 and 2420 strikes. So we feel till the time this zone of 2380 holds, Reliance can make a move to 2550, 2570 in the forthcoming 3 to 4 sessions.
All right, and any stocks or 2-3 stocks that you think are nearing their breakout level right now?
Absolutely. See, the first one is Mahindra and Mahindra. Now, this stock has been sustaining above its November swing highs, and while the auto index is below those swing highs. So, in a sense, M&M has been outperforming. The results have been in line. The stock in the last entire 8-10 sessions, when the markets have been under pressure, the stock has held on to its important support, and the longer term as well as the medium term charts are looking positive. So I feel that till the time 1350 holds on M&M, this stock can make a move to 1430, 1440. Another stock which is nearing its breakout zone is Cummins India. Now, we've seen a lot of action in the capital goods space, Larsen, Cummins, Siemens. But Cummins, if we see, it has made a decent breakout with volumes in the last 4 or 5 sessions from 1450 to 1550, and it has been sustaining around this zones in the last couple of sessions. Now, it has given a fresh breakout with volumes, and it's trading above its all moving averages, and all the shorter term moving averages have also been inching upwards. So we feel that till 1590 holds on Cummins, this stock can make a move to 1700 zone on the upside.
All right,
The third one would be
Sudeep, let me just interrupt you here and quickly address the top movers of the day before we ring, before the opening bell. You can pick and choose, of course, from the list. And first one in the list, we have Interglobe Aviation, where, the promoter's wife, Sobha Gangwal, would be probably selling in 4% stake in the company via block deal, which is likely to take place today. The offer floor price at around 1,874.75 per share. And overall, the offer size is to an extent of around 2,930 odd crores. There is a lockup period, of course, to an extent of 150 days post block deal. In another interesting one that we have, Motherson Wiring, Nomura has initiated a buy rating on this one, and the target price is to an extent of around 62 per share. Its leadership in wiring harness. Sumit, also it has expertise, the voltage expertise is expected to aid the EV share, which is expected to drive the growth going ahead for this one. It has delivered 27% FY23 to FY25 EPS CAGR, and it's currently being valued at around 35 times its FY25 expected premium. Apart from that, let's look at Adani Group. That's one, again, the bunch is got to be in focus. MSCI has now deferred the previously announced changes overall in the group in the February balance. Well, the weight reduction is for, if you remember, was for Adani Total and Adani Transmission. That has been postponed to May review right now. There was a potential, replaceability issue, which probably led to the delay coming in for all the Adani stocks. And, this was in Feb review that this came in. So clearly, again, it's going to be these, again, group of companies will continue to be in focus. And of course, separately also Adani Power, right? There is the company came in with an announcement previously and said that it has announced lapse of long stop date to complete DB Power acquisition. So that's going to be one. Counter which is expected to be in focus. And also, let's talk about the defense companies, overall. Defense are expected to be in focus completely today. We have Garden Reach ship builders and engineers. Apart from that, you also have 3 of other names, right? But we are waiting at the sidelines right now and waiting for the markets to open to see if we are again trading past that 18,000 odd level. That's something which is going to be interesting to watch out for. Clearly look at Nifty, okay, it's managed to keep the head above that level. 18,000 level clearly has sustained 0.3 of a gain coming in on that one. So clearly, the handover has been positive. Markets have been reacting positively. Let's look at Nifty Bank Index, right? 0.3% on that one also. If you look at Reliance Industry, much of the support actually came in from Reliance Industries yesterday. So, Reliance Industry, we saw 0.5% gains coming in also on Reliance. So clearly, the index heavyweight seems to be supporting the positive momentum coming in on Nifty. ONGC, of course, there was a windfall tax gain exports cut which has come in, and ONGC, of course, has been reacting to that development. Nestle India also will be reporting in numbers by the close today, and that stock has been reacting positively for you. 0.5% out there. Interglobe Aviation, of course, the stock has been down and out by as much as 4.5% on the development that the promoter group is going to be selling off some stake in the entity. And Motherson Wiring, where you have the initiation report coming in on that one, and we're seeing some amount of gains coming in clearly. On Motherson Wiring, not really a sharp momentum, but of course a positive start coming in for Motherson. Apart from that, Adani Power, well, looks like the development seems to be positive for the company. We're seeing gains coming in on that one to an extent of around 5% odd. Of course, we can also bring in few defense name up for you, which is Mithani around, you have HAL, you have BEL. These are few defense names which are expected to do well in trade. Of course, they've signed a couple of contracts around with the companies, and there has been a budget hike announcement also when it comes to the government suggesting that. So clearly they were some group of companies which are in focus right now. But Sudeep, I'm going to quickly come back to you and ask you now that the market has opened and we're looking past that 18,000 level has been sustained. Where do you think is the next resistance coming in for the markets?
See, the next resistance would be around 18,200, 18,250. That was the zone last time when we started falling in the last week of January. So that zone is now very critical from a Nifty perspective, that if that is taken out, we are seeing for a decent up move past 18,350, 18,400. But let us take one level at a time. 18,220 to 18,250 will now act as a next important resistance.
All right, Sudeep, how about Nestle? That also is going to be a company which will be reporting the numbers today, right? Probably by the market close, revenue is expected to be around a 17.5% kind of jump out there. Profitability, we are expecting it to be higher by as much as 58% year-on-year basis. Profits are expected to take a hit because of, in the base quarter, we've seen some amount of contraction coming in on account of the past service cost and contingency provisioning. What do you make out of the numbers, and overall, how does the FMCG index look right now?
See, overall, if we see, Nestle has underperformed the FMCG index and the markets for over a while now. Over the last couple of months, last 2 months, we've seen the stock underperforming. While the FMCG index is near to its lifetime highs, we have seen a minor consolidation at higher levels. But compared to that, Nestle has underperformed. But if we see the charts very closely, the stock is now very close to its 200 DMA. That has been a good support zone for the stock overall since the last many quarters now. So around the results, the stock around its 200 DMA, a lot of things already been factored in. So I feel till 18,800, 19,000 zone on Nestle holds, the stock can move up to say 20,200, 20,250 on the upside.
All right, Sudeep, ahead of RIL and ONGC, like I just suggested, we spoke about RIL, of course, but then government has slashed a windfall tax on diesel and jet fuel exports, beg your pardon. So clearly we're seeing that to be the theme playing out for today. We've seen, of course, support already coming in from Reliance. What do you make out of ONGC, and what are the levels that we can look at right now?
See, ONGC, if we see the stock, two things that we can see out of the oil and gas index is that while oil and gas index was on the downside, Reliance did not fall much. Even ONGC also was holding on to its key support levels. So I feel 147, 145 zones will act as a strong support. The stock is forming a strong base around this zone, and a crossover above 152, the stock will move up to 159 to 161. So overall, the trend, the setup is positive. 145 is the base case support, and the stock seems ready for a move from here on, because the oil and gas index itself is on an oversold zone. So a slight bounce back in the index itself, the strongest out of these sectors would start moving on the upside. So I feel that the Reliance, ONGC in the next couple of weeks could see a decent up move from here on, and the downfall in them would be limited.
All right, Sudeep, we'll leave it at that. Thank you so much for taking out the time and speaking to us. Well, it's that time of the show where we bring in the fundamental guest, Avinash Gorakshakar, who is the SEBI registered analyst, Director Research, ProfitMart Securities. Avinash, good morning there. I'm going to first chat about RIL and ONGC and the windfall tax gain cuts which have come in, especially on the exports. What do you make out of the development, and do you think there is a further upside coming in on these upstream oil companies right now?
Yeah, good morning, Nikki. I think clearly, the cut in the windfall tax is going to be a kind of a sentimental booster. And if at all, this trend continues on the downside further, then you could probably see a significant re-rating in companies like ONGC and Reliance. ONGC in particular, because that would obviously entail a lesser outgo, on terms of the windfall tax for them. And in terms of the risk reward, I think ONGC looks pretty attractive considering the fact that crude prices have stabilized. More importantly, throughput has increased significantly. The windfall tax cut is definitely going to be reflected partly in the March quarter, and obviously, if this trend continues, you could probably see the earnings getting impacted positively for FY24 also. So I think net it's a big positive, but I think we need to have a sustained downside trend visible on the windfall tax because this number keeps on changing. And if at all the crude prices come down, then I think very clearly windfall tax is definitely going to be cut down because this is definitely not a long-term but a short-term measure.
Fair enough. Okay, Avinash, I'm just also going to talk about FMCG sector overall. What do you make out of it? Is there more to FMCG sector as compared to a HUL and a Nestle earnings, Nestle names? Of course, Nestle will be coming out with numbers today. What do you make out of it? And do you expect the valuations to remain rich, just the way it is as compared to the rest of the peers? What do you make out of it?
Yeah, I think, Nikki, Nestle earnings definitely would be moderately better than compared to last year. I think the fourth quarter would see a mid-teens volume growth of 7-8%, but I think the value growth would be significant. And I think the profit growth would be significantly higher, I think around 40 to 45%. But I think what is important is that going forward, the rise in commodity prices, the rural demand, as well as what kind of new product launches they put out in the coming year is going to be very important. So I think the markets would be looking at the management commentary on all these data points. More importantly, valuations for Nestle are unlikely to come up largely because of the fact that it's a high ROE and a high return on capital employed business. And they have been able to, gather and consolidate their market share in principal, frontline products. So typically, I would not be surprised that, multiples would remain the same, but the near-term trigger would be earnings growth, which hopefully in the coming year should be significantly better than last year.
All right, let's also chat about defense space overall. That theme looks to be interesting, at least on the face of it. The government is set to spend around 75% of the total defense capital outlay for procurement for the manufacturers from 2023-24. How do you see that, and any specific pockets that look attractive to you?
Yeah, I think, Nikki, defense is not a short-term but a multi-year theme. And I think you're right. The recent Aero India exhibition has clearly indicated there's a very big appetite from the export market for Indian defense companies. And specifically, if you talk about some interesting companies, Bharat Dynamics has signed about 10 contracts. They've launched 2 or 3 new defense products. Hindustan Aeronautics, Bharat Electronics, Astra Microwave. These are all companies which I believe look to be quite interesting from a longer term point of view. From the marine side, companies like Mazgaon Dock, Garden Reach are also sitting on a very strong order book. So this defense budget, which was around 2.4 lakh crores this year, and the government mentioning that almost 75% is going to be utilized, is clearly good news for all these companies because that gives super visibility for these companies for the next 2 to 3 years. So I would believe that, this is a space which investors should definitely look at and obviously have it in their portfolios. Near-term possibilities are that it could be a kind of a volatile market, but in the longer term, especially over the next, say, 12, 18 months, I think this could offer a very decent risk reward for investors even at the current odd price levels.
Avinash, I'd also want to chat about, since it's a pre-election year also, right? So do you still think there will be a significant amount of momentum still building in for these ones? Do you think on-ground reality will actually start changing for these defense manufacturers anytime soon? Your assessment, because we're seeing order book right now at a decent level, but do you expect that momentum to continue overall?
Yeah, I think most important thing is, Nicky, that the export market and the export potential for all these defense companies has opened up significantly. So in a pre-election year, it may happen that orders may get elongated. There could be some time delays, but one thing is very clear that orders would definitely come in. So near term, I think the markets would obviously discount the fact that order pipelines currently already are pretty solid. I think most of the companies have got a 2 to 2.5 year kind of revenue visibility. So even if there is a delay in new orders, obviously there would be a lot of L1 orders which would be in the pipeline, and that would materialize maybe not immediately, but in the near term. But the export market is a large market where most of the companies would try to actually capitalize and try to get further kind of incremental business, from overseas market. So I think despite a pre-election year, I think, if somebody wants to build a portfolio of good defense stocks, this is a good time to accumulate, considering that this is not a short term, but a multi-year kind of story which could extend, the earnings growth story for the next, say, 2 to 3 years.
All right, Avinash, let's also talk about IT stocks overall. We've seen some amount of recovery coming in from the lows. What do you make out of this space, and do you think mid-cap IT space right now looks more attractive than the large caps as compared to in terms of the earning growth as well as the valuation?
Yeah, I think mid-cap stocks definitely look interesting, for investors who got a larger risk appetite. But I think in companies which look interesting to us include KPIT, typically Persistent. Our sense is, both these companies have got very strong kind of, business vertical strengths, a very good marquee customer base. And most importantly, they still have a decent order book, which would actually help them, look at a positive kind of earnings trajectory, at least for the next 12 to 18 months. I think clearly if there is a significant improvement in the tailwinds from US and Europe, that would obviously give it a further sentimentally boost factor, probably from the second half of 2023. But I think nevertheless, even at the current levels, most of the negatives seems to have been factored into the price. And I think the best part is most of the IT companies are cash rich, high ROE generating companies and very good dividend payout paying companies. So I think investors need to take a contra call and, probably given a little more time for this sector and such kind of companies to deliver. So it's a waiting period, but I think it would be worth the wait, provided, tailwinds in US and Europe get better.
Sure. I mean, let's also talk about banking space, right? The rate sensitive. Moving on from defense to rate sensitives, let's talk about banks. PSU banks, Avinash, overall we have seen in the previous year a rally coming in on Nifty PSU, clearly. And this quarter was no different. It's, the overall sector reported strong set of numbers. Do you still see an upside coming in on this one and valuation still being cheap? What do you make out of it?
See, I think after a very long time, public sector banks have started delivering very well on the profitability numbers, on the asset quality numbers. And I think with a credit growth of almost 15-16% expected for the next, say, 2 to 3 quarters, our sense is that not only retail demand, but even the corporate capex, kind of requirement is going to show strongly in the banks, numbers. Specifically, if you talk about the larger banks like SBI, Bank of Baroda, Canara Bank, our sense is that the fourth quarter typically is also a closing quarter, is a stronger quarter for all these banks. But coming to FY24, our sense is that the growth momentum would continue, because hopefully, with the economy growing by 6% and corporate capex picking up, it would not be surprising that, despite large balance sheets, we could see a decent ROE and a decent ROA number from most of these banks. So I would believe that one should use the weakness to get into such banks. There could be some kind of volatility in the near term, because stocks have gone up significantly in a very short time span. But longer term, at least next 12 to 15 months, looks pretty strong for all these PSU banks. So I would still bet on them, provided, you've given a little more time for them.
All right, Avinash, we'll leave it at that. Thank you so much for taking out the time and speaking to Moneycontrol as always. But with this, it's a wrap. Thank you so much for watching. Please post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.